Okay, good morning. Good morning. Thank you for us starting a little tardy here. Had some technical difficulties, but we do like to start right on time. So I'm going to start with our marketing disclaimer. By being involved in this platform, you are authorizing permission for this to be videotaped and uploaded to our website and to use in our marketing materials. Additionally, no reproduction or use of this video may be made without prior written consent. Thank you for being here this morning to go over our program Behind the Curtains Insurance Inspections. The team from AK Certified Roofing has a great presentation in store for you today. So again, thank you for being here to learn. We always love to see where everyone is joining us from and if you're a board member or if you're a CAM. So if you would be so kind, please put that into the chat now and let us know. Speaking of chat, if you have any questions during this presentation, I ask that you please have them ready, but wait until the end of the presentation to put them into the chat. And as always, please mute yourself so that we don't get any feedback. Additionally, I will send in the chat an email address where you can schedule a consultation for your association with AK. And we will also be emailing this video out so that you can share it with your board members. It is my honor to introduce AK Roofing's owner. Please meet Andrew. Andrew was born in Boston and moved to Palm Coast in 2001. He created AK Certified Roofing Company in 2017. Having been in the construction industry for over a decade, in these past 7 years, AK Certified Roofing has grown tremendously. Andrew started this company locally in Palm Coast and has since expanded throughout the state. Andrew takes pride in meeting the needs of his neighbors in the local communities and building relationships with his customers. He has certifications in both building contracting and roofing contracting. Andrew, we're looking forward to hearing your presentation today.
Thank you, Diane. Again, thank you for having us here today and being a part of your webinar. And thank you, everyone, for joining us. I'm Andrew, owner of AK Certified Roofing. We're a state license here in Florida. We do all types of roofing from flat roof to shingles and metal tile as well. We're going to go over some fun stuff today, mainly about insurance and how we can help you guys maybe navigate some claims, make your process a little bit smoother, and get the coverage that you guys deserve on an insurance claim. We have two speakers, John Difato, and Stephen Difato. They're both very, very experienced in this field, especially with insurance. They can lead us to all types of different avenues to try and make your claim process easier, smoother, and get the coverage you need. I'm going to introduce you guys to them as well. Jack Difato, he's a licensed public adjuster. He's the founder of Property Claim Experts, and he's dedicated to representing policyholders in disputes with insurance companies. The firm handles various claims such as hurricane damage, roof damage, water damage, sinkhole damage, and more. He's been on the news trying to help people after catastrophic events, trying to help people navigate the process. He's a really good source if you guys have any issues when it comes to that. And then if Jack can't help you, the backup to Jack is Stephen Difato. Stephen Difato is the founder of Difato Law and lead attorney at Difato Law, a trusted legal team committed to providing personalized and effective solutions for its clients. The reputation for professionalism and attention to detail. He specializes in real estate law as well, and a couple other things he can help you with as well. And then that's pretty much it for the introduction for them. I'll jump right into it. I know we're running a little bit behind. Sorry about that. And we'll get started. One second. Trying to get this thing to work now. I am. So, couple things. I know the last few months we've had some hurricanes. We had some storm damage in the state of Florida. It's caused a lot of issues for people and homes and families, HOAs, buildings, and going through that process of trying to build back. It can be daunting, can be tedious and challenging. And if you don't have the right tools and the right people on your side, it could make things harder than they need to be. One thing that we wanted to go over and see how we can help you guys is navigating the insurance claim process and what we can do in the background, what we can do before the claim, after the claim, during the claim, and make things easier for you guys. Um, I know with dealing with insurance companies, they can be very, very challenging, um, specifically after a catastrophic event, since there's many people putting in claims for their property, and it can be lost in I guess the transactions could be kind of lost between the homeowner and the insurance company and the claim adjusters. There's so many different moving parts and pieces. So having someone with the experience and expertise could help benefit you guys on that process. Um, the couple of things that I wanted to touch on would be how to handle a claim process. What would you do? How do you navigate that? What would it be like the first thing you would do in that process? And I wanted to bring Jack in on that on his side and see what he can do and give us a little bit more insight on the best practice to do on insurance claims.
Yeah, good morning, everyone. Been in this business a long time. Probably 2 or 3 years ago, I never really had to read a policy in terms of hurricane, but I'm sure you guys have all watched the news and had clients complaining about their premiums going up. The problem is the premium's been going up, and then they're also putting Swiss cheese holes in the umbrella. And what I say by that is I've got to read every policy now because they've added lots of exclusions and endorsements. If you guys do a lot of commercial, the first thing I do is look at co-insurance and also your deductibles. I had a guy come to me the other day where they're paying, I don't know, 30 grand in insurance a year, and the deductible was like 50 grand for hurricane, and the roof was 50 grand. So I couldn't really help him. So the first thing, if you were doing a claim or a damage, would be is get the policy. It's not 5 pages, it's probably 70 or 80. Lots of legal terms. Every word means something. The next part would be is for future hurricanes to see, A, do we really need this coverage if the deductible is so high? So should we lower our premiums because, hey, we can go self-insure on the roof, or should we raise it and get it right, so that if we did have an event, we're made whole? And then the second part is if you do have coverage, speaking to insurance is like speaking Spanish. There's a way they want to hear it. You have to remember most of these people have never been on a roof before. They don't understand construction. They don't understand hurricane costs are a lot higher. I use the analogy, if I went to McDonald's, you price out the bun, the lettuce, the cheese, the bacon, the burger, and everything itemized. Whereas if you called a roofer, they're going to give you the price for the hamburger or the roof, but the insurance wants it itemized for every stupid line item. So I'm doing a flood claim right now. The contractor gave 10 line items for everything, and the total line items I did to translate it was 550. So it's a whole methodology, and it's only getting harder and harder in Florida. And that's kind of where public adjusters get involved, is to help translate and give you a second opinion. And then again, sometimes we're not even successful, and we have to go to arbitration, such as appraisal, or get lawyers such as my brother involved. So any questions with that? We can get you guys more coffee if you want.
I'll throw in something on what Jack was saying.
I was on mute too. I apologize. But go ahead, Stephen.
I was just gonna say, I think what Jack's touching on is that a lot of things are changing, and unfortunately, everyone has to be a lot more aware and pay a little bit more attention because insurance companies are heavily regulated by the state, but with the last couple years, the state has given them a lot of ability to manipulate policies. Policies used to have to follow a more form fitted. And now they have the ability to tweak things a lot. Whereas everyone says, oh, this is my premium, this is my deductible, and that's pretty much it. Now there's everything. There's a lot more going on with each different type of claim, each type of deductible. There's percent deductibles, there's limits on coverage that are happening, so it's not just as easy it used to be. And like Jack was saying, we have to read policies. We have to see them, and they're forcing homeowners to do certain things that they didn't have to do in the past. But yeah, go ahead, Andrew.
Um, going off what you said, is there a is there something that like homeowners and like HOAs where there's multifamily homes where they have to be a little bit more involved in those policies? Do they have to open up their own coverage for like personal damages? Say like there's a multifamily home that uh, the HOA is covering the insurance on that property, and there's a catastrophic event where the homeowner or the renter or the person that lives in there has damage to their property. Do they have to have their own policy with that? And how does that look with trying to cover those? Is that something that should be talked about with tenants and people that own in HOAs?
Yeah. It the typical way of the land is the condo owners would have something called a HO6 policy that would cover anything resulting from wind. The HOA typically will cover the drywall inside, and then the homeowners are responsible for the texture paint, floor coverings, cabinets inside. Now, what I'm seeing right now is some of the HOAs did not carry flood insurance, and I'm finding out a lot of the homeowners did not carry it because they thought the HOA carried it. So the question would be is if you flooded, who's covering it? And I would recommend, that being cleared up because, I work the whole state, but I'm based in Tampa and getting a lot of calls to help with the flood. And I tell them, hey, the HOA didn't have insurance and you'd have insurance. I'm sorry, you got to pay for it yourself. The hurricane insurance will not pay for it unless it came from the top down, meaning the roof.
Gotcha. Now on like when it comes to like lowball offers from claims and stuff like that, like obviously I've dealt with a lot of homeowners myself, not so many HOAs through after the hurricane event, but being a roofing contractor, we have a wide variety of clients, and the main ones have been homeowners and their single family homes. And a lot of them have tried to navigate the claim process themselves and do the process. And what I've been seeing is that the insurance companies are going out, doing the adjusting, writing up the adjustment, submitting it, and then homeowners are getting their estimates back. And I'll go and I'll talk to them, and they'll tell me they feel like they're being lowballed. And in fact, I think they are being lowballed on those offers and those coverages. Is that that's something that should be talked about like towards the beginning of the claim process? How do the homeowners navigate that themselves, or does that take someone like Jack or Stephen to do that and negotiate with the insurance companies? Are homeowners able to do negotiating?
I so if somebody called me right after the hurricane, this is what I say. I say, A, you can try it yourself. Um the positives are you don't have any obligation to a public adjuster. We normally charge between 10 to 20%. The negative side to it is that A, you could say the wrong thing where the insurance twists it and uses it against you. B, uh, people just focus on roofs and it's like going out to eat and you're just looking for a steak, but you don't realize you can get potatoes, desserts, and vegetables. So I typically find garage doors pushed in. I usually find some kind of debris that hit the walls, meaning you're owed an exterior paint job. Uh, there's some exclusions on lanai we can get around. The people that are excluded with pool cages. A lot of the time, the pool cage creates damage to the pool deck. And even if the pool cage is not covered, the damage from resulting from it is covered. A lot of times people look at the walls and say it's a little spot, but they don't realize mold's growing or there's water in there. So it's not really like it's good to save money, but in the long run, if you're missing so many things, you're kind of hurting yourself. So then if you were to hire a public adjuster or a lawyer after the fact, the insurance has already kind of gone down their hole or their rabbit hole, and it's a little bit more work or harder for us to get you out of the hole because you might have said something wrong or they missed it, and now they think we're just being greedy instead of the first time in the beginning when we had a fresh start and we could have walked it with the insurance to say, hey, you missed this, you missed this, let's work together and take pictures. So it's
So
yeah. Go
so
ahead.
that would so with that being said, like say a homeowner or HOA had an issue with a roof issue, and they started the claim process themselves, and say a month into the claim, they start noticing that their ceiling has staining, and they didn't realize it prior. Is that something they can still get covered during that claim process, or is it a little bit harder to do, or how does that work?
You can supplement that, but some
Okay.
people might say, oh, it's a new claim from a new storm or something. But I mean, if it's close enough, but if it's 6 months, it's kind of far.
Yeah.
Yeah,
Um,
let me throw something in there, Andrew. Yeah, it all depends on insurance companies, which one you have. They all kind of act differently. One might say, yeah, no problem. The other one might say, oh, go make another claim. But what in Jack's what he was talking about when you start saying doing it yourself and getting yourself in that hole. I see a lot of homeowners, they say, we should just send in the estimate, a reasonable bid from a roofer, get the cheapest one and send it in and hopes that they'll pay it. I've found that insurance companies don't care if you're being honest or not. They care whether they're going to pay it or they're not going to pay it. You could submit a bid for $1 million. You could submit a bid for, $10,000. They don't care. They're either going to say yes or no. They know exactly what they're going to pay for that roof. They know exactly what they want to pay for that roof. They don't, and I'll see homeowners will say, well, I think if the roofer would have put in an honest bid rather than a little bit higher to negotiate, they would have paid it. But that's really not the fact. These guys have been doing this for years and years and years. They pay roofs every day. They know exactly what they cost. And the reality is that if we are within the bounds justifiable in the amounts that we're asking for, it creates room for homeowners to negotiate to get where they want. And so if the roof costs $20,000, it doesn't matter, if that's what you're paying and you go and put the roof on yourself, they're going to say, well, we could have done it for 15, even if you're being straight honest. But if we go in there and we try and do a good job negotiating and say, hey, we really need 25, they say, okay, well, we can do it for 20. And then you land perfectly where you need to be. So it's unfortunate that homeowners have to play this game, but insurance companies are in the business and they make money and they're able to advertise at the Super Bowl because they take advantage of homeowners premiums and paying less for each thing. And, they're not going to pay as much as they need to whenever they don't have to. So,
yeah, I had a client that we went out and did an inspection of the roof, and he did his own claim. Um, and now he's in the process of trying to figure out like how he's going to come up with the extra money that's not being covered underneath the claim. And my next step is actually to pass it on to you, Jack. But the one thing I did notice is that what the insurance company left out was the flat roof on the house. It was a pitched roof with a flat roof, and that transition from the to the flat roof they're leaving out because they said it had no damage. Well, there was leaking in the house, and there was some damage on the roof itself. The roof is older, and so I pointed out to the homeowner and spoke with the adjuster that was out there and let them know, like, listen, this should be covered. The flat roof should be covered because the transition from pitch to flat, you have to have that flat roof going up the roof at least three courses of shingles. So it's going to compromise the flat roof moving forward, and there's going to be an issue down the road. And the insurance company is trying to get away without having to get that covered and not spend the money on and doing that. So like Steven said, having a roofer going out or a public adjuster that knows the ins and outs of the claim process and how the systems work and all that, it does really benefit the homeowner, and it could make a difference, really big difference in the claim process and what actually gets covered. Um, Moving on to to supplementals and stuff like that. You mentioned that a minute ago, Jack. After a claim, what's the supplemental process look like? Whether it's a flood, a sinkhole, a roof, how do you navigate that? What documentation should the HOA take or a homeowner take? Is there photographs? What should be done?
So if you came to me after you filed the claim and the insurance met, first thing I ask is, do you have a contractor? Second, I ask, what does your contractor need? Then I take what the insurance sent us, and then I don't like going back and forth. It's just, hey, what's the damage? And you'll say, hey, the roof's covered by the insurance, but they missed this or that. Great. What does AK need to do the inside and other stuff? So then I can say, okay, this claim needs to be worth 50 grand. Um, I'll take the pictures, sent them in. I'll write my own line item estimate incorporating the whole claim. I'll typically write it a little bit higher to negotiate, since the insurance will want to feel good to chop me down to the number, and it becomes a negotiation thing. And I tell the homeowners three things: A, I get nowhere. We got to get a lawyer involved. B, we get a decent offer, but it's not what I want. But if you want to settle, that's up to you. And then C, it's an offer where you're back to where it should be originally. You pay your deductible and everything gets covered.
Now, is that something a homeowner or HOA can do by themselves?
They can try. It can be done, but it's frustrating. And if they do it wrong, it's hard to get. It's just like Steven said, if they send the wrong stuff in, like I had one yesterday where the lady had a $12,000 tree on the roof, and the invoice, instead of just saying tree removal from house, it said tree cutting up and stump grinding for 60% of it. And there's stump grinding is not covered, and there's a $500 limit for tree haul off. So customer A ended up only getting a third of their bill paid. My other customer B submitted it properly without line and got the whole bill paid. So it's, you know, for me, it's terrible when I get, or the homeowner or the HOA thinks they've done nothing wrong. You got to think that the HOA, the homeowner, is like someone in kindergarten looking at mom or dad to take care of them, and mom and dad didn't take care of them. So there's nothing you did wrong, and I don't tell the homeowner or HOA, hey, you really screwed up, to make them feel bad, but we do the best we can with the cards we're dealt.
So, say they started their own claim and they got a repair estimate back from the insurance company. Is that something that they can then contact you or myself, and I can go out there, assess it, see exactly what's out there, and then have a reinspection done with you on their side?
Absolutely.
And then if after that reinspection, if they come back with a repair again, or they're sticking to their original estimate, then I guess the next step would be, I guess, what would that be? Mediation?
Uh, the typical Florida policy has mediation, which is a non-binding arbitration. Then there's appraisal, which is a binding arbitration. A lot of policies don't have appraisal in it. It's not like a house appraisal. It's like a binding mediation. If you decide to go that route, you cannot go to a lawyer later. And then third is litigation with a lawyer. I don't know what companies you guys have, but like American Integrity does not have mediation. Not mediation. They don't have appraisal. Uh, Heritage, Slide, uh, State Farm, they have to agree to go to appraisal. So we'll say, hey, let's go to appraisal, and they'll say, screw off, we're not going to appraisal. And if all points are exhausted, then you know, it'd have to go into litigation if it wanted to be pursued.
And then on the litigation side, I guess Stephen, I guess your first step would be what, a CRN?
Yeah, I mean that's a little bit not as big with the law changes, but
Uh,
basically, yeah, and it's fine. I'll explain it. But you know, if it comes to a point where Jack's hitting a wall, and honestly, I feel like a majority of claims, I'd say 80-90% of claims are not going to get approved without an adjuster or an attorney. Um, with the new law changes, basically they used to have to pay our attorney's fees. Now they don't, but the goal is essentially to negotiate to get an amount that covers attorney's fees and everything on top, just like you would with an adjuster. But insurance companies are empowered now, and they're more willing than ever to fight because they don't have to look at the possibility of $100,000 in legal fees. So I try to get things resolved before litigation, but if I don't, it's, you know, more and more I'm having to go to litigation. But I have filed what's called an intent to litigate. It's essentially a system created by the state of Florida to alleviate the court systems, essentially putting the insurance companies on notice that there's an attorney and somebody's going to sue them potentially. And here's 10 days to try and figure it out. We have to wait those 10 days at the very least to sue. So there's a little bit of gap period before you can sue an insurance company. And I'd say like 30 to 40% of them now will get resolved before litigation. It used to be 80-90% would get solved before litigation. So that'd be the first step. And then at that point, you'd have to sue the insurance companies, which isn't as scary as it seems, but it seems scary to most people. But I don't know if you want me to go into that, Andrew, if you want to move on.
if you want to, it's up to you. Whatever you feel comfortable doing.
I'm fine with whatever. It's going to take, you know,
Yeah,
5 or 10
I
minutes.
think that's something. If someone is interested in the
Yeah.
webinar,
Well,
they can definitely reach out.
I'll just throw out the key points on it. Litigation is not as scary. People ask the two biggest questions is my premium going to go up if I fight? And the answer to that is no, it's not, because it's an act of God. You know, tornado, hurricane, hail, flood, that kind of thing you can't control, can't affect your premium. So the only thing that goes on your record is that you guys have made a claim. Fighting it is not a thing that goes on your record, other than, you know, you'll be settling on public records when you see that. But it'd be terrible precedent and policy that you can't fight insurance companies. So it'd be very unfair to punish people for that. So that's number one. Number two is, you know, am I going to be responsible for attorney's fees? What's this going to cost me? I don't know any attorney who doesn't do what's called a contingency contract, meaning that we get our fees paid for by the insurance company. So goal is to negotiate to get the amount that's above it to pay for attorney's fees. But what I tell clients is worst case is if you know, come out with 70-80% of your amount, still better than zero, because everyone's having to replace their roof. So might as well maximize the amount you're getting than having to pay 100% out of pocket. You know, 70-80% is better than zero. So those are the couple points.
Now, going into back to you, Jack. Thank you, Stephen. The say we have a homeowner or HOA, they're getting a new policy. They're opening up a new policy with an insurance company. What's one thing that they should look at on their policy or pay attention to?
The deductible. Most people do not understand that. Then there's something called a co-insurance clause, and that's a basis of the value of the building per how much insurance they have. If they're undervalued on it, then let's just say the insurance says we're at $100,000 and they're underinsured, they could take an additional 10-20% off the payout. The third biggest one that I am seeing that everyone, even my own house, needs to take advantage of and review big time is they're doing these things called roof schedules.
Mhm.
And what that means is, like I had one the other day, they said here's $100,000 for a tile roof, but you have a roof schedule, so we're only paying 40% of it. So they wrote him a 40 grand check instead of 100,000. His agent never told him anything. And he's like, I'm paying for a replacement cost policy. Why did they sneak this in on me? That's the first thing. The second thing is there's something called a 1% matching rule. And I've only seen one company do this on the roofs, but they're doing this on the interior. So like say you're kitchen cabinet under the sink started gushing, and that cabinet alone got damaged, but now I can't match the rest of the cabinets. So what they'll do is they'll say, hey, we'll pay you for that one sink that touched the water, but we're only going to pay 1% of coverage A to match the rest. So your kitchen might be 30,000, 40,000, and say your policy, let's just say it's 700,000 is your coverage A. 700,000 times 1% is 7 grand. So they'll say, hey, here's 2,000 to fix your cabinet, and then here's another 7,000 for your matching, and that gives you 9 grand, and we've given you what we owe for your whole kitchen. So now you're short about 21,000.
Wow. Now, does that have anything to do with ACV and RCV, actual cash value?
Um, in a way, yes, because they're still going to put it under ACV until you spend the money. But there are some policies that are ACV only, which is more like if you ever got in an auto accident, your car that you bought was once 40 grand, and then the value at the damage time is 20. So, in addition to the roof schedule, in addition to the 1%, there are some policies that only cover it after depreciation.
Gotcha. Now, with some of the companies out there that have the right to invoke, um, I've come across some in the past. Is there any way around that at all?
I'll tell you what I know, and Steve can tell you what he knows. I sometimes get out of it by arguing, we'll do it for a good price and be reasonable. There's sometimes they just say, screw off, we're using our guys. If they use their guys, they're on the hook for the roof work because they might not do a good job. What I tell the contractors who are upset they lost the work is go back out and see if there's anything wrong with the install. Second of all, a lot of times these companies are using guys who are not licensed or don't have proper workman's comp insurance. They don't have proper papers to be in this country. They haven't been drug tested. So it's kind of scary who you're letting on your home that the insurance is forcing on you to save $1. And then
That's
from a legal standpoint, Steve's can, chime in, but I don't know any way out
Yeah,
of it.
I mean, so kind of on the same theme that we've been talking about the whole time is that, well, first let's back up. Right to invoke repair, you guys kind of talked about it, but for people who don't know what that is, insurance policies have a thing called the right to invoke repair. And that basically means that, hey, we agree that the roof is damaged. We agree that needs to be replaced. But our policy states that we get to choose who we want to do. We have what's called a preferred vendors list. And they might give you an option of people that you can use, or they might just say, hey, this is our guy, schedule it up and knock it out. In that case, you really don't have a say in what they were saying. You don't really have a say on what's going on your roof. They're supposed to replace it with, a light kind, but what does that mean? It's tough to say. So it's something they sneak in for homeowners in your policy. And what I'll say on the legal standpoint is it really depends on what insurance company. Jack kind of touched that, is that how they behave, but also in the way their policy reads. Some of them say that we have the right to invoke after 30 days of our inspection. So we inspect the property. Now within 30 days, we have the option to invoke. And if it's past that 30 days, we can't exercise it. Some of them say after every inspection. And some of them will say, we can do it up to 90 days or whatever it is. So if you have something like that, you basically have to see the policy. And if they're obeying their policy and invoking and choosing their roofer company, then it kind of becomes you're the subject of, are they flexible? Are they inflexible? I will say insurance companies that have it, the worst one is People's Choice. They're absolutely crazy. And if you go and let's say you don't want to use their vendor and you replace the whole roof and you pay out of pocket, they will go and sue you because you're not being compliant with the policy. They're absolutely insane. I've had that happen once and they dropped the case. It's more complicated than that in the one, but Olympus is another insurance company who does it. Olympus is kind of goes in waves where they'll do it and force everyone to do it. And then they'll go in a wave of, hey, they're too busy. If you find somebody that can match it, we'll give it to you. And then Security First is one who their goal is to put the roofers out of business if they're not with them. And they don't care if you can match them to do it lower. They want to make sure that their guy does it, but they're not going to go and sue you. I haven't seen it, at least. So at the end of the day, that's what it is. Getting around it is basically obeying the policy or choosing a policy that doesn't have it. It's really the two options on it. So the answer you want to hear, but it's the reality of it.
Gotcha. Now, moving on past that, kind of backtracking a little bit on the claim process. Obviously, a lot of homeowners and HOAs, when they do a claim, they're there's money held back by the insurance company, such as like depreciation and law, ordinance, code, stuff like that. All those things, are those guaranteed to come back without the homeowner or their HOA going to the insurance company, or are they just going to sit back and let it ride? And if enough time goes by, they lose the money. I mean, how does that work?
I can take it or Jack, it doesn't matter, but I'll touch on it, and Jack, you can fill in any gaps if I miss anything. But basically, there's called a replacement cost value and an actual cost value. Replacement means you get the amount of money to fully replace the roof. Actual cost means you get the value of the roof as if it were today. So they take away what's called depreciation. I think most people have an idea of what depreciation means, but essentially, if your roof cost $30,000 to put on, and your roof, let's say, it has a life of 30 years and it's 10 years old, they might say, okay, we're withholding $10,000 because it's depreciated 33% of its life. So instead of for an actual cost value, we're paying $20,000 if that's your policy versus a replacement cost policy. What they would do is they'd pay you up front $20,000 and then withhold $10,000 to pay you at the end once the roof is replaced. So it's a little bit complicated if you're not familiar with the stuff, but essentially, policy one is actual cash value, which means they pay for the whole thing, but they withhold a certain amount and then they pay it out once the roof's done. The other one is called a replacement. Or replacement is that one, and then actual cost is when they pay for what's the roof costing at that specific date. So most people's policies right now are replacement. In most people's, they will do what's called withholding depreciation, and that means that if the roof costs $30,000, they'll pay you 20,000 upfront, and then once you go and do it, if you go and do the roof for $30,000, they will then go release the other $10,000. And where insurance companies get people on replacement cost value is if you go and do it, and let's say they did it for $28,000, they would only pay you $8,000. And so it makes sense. It's not like a crazy thing, and this is a little bit more complicated in everything, but it's a way for them to save money. And what you guys really need to take away from it is that more and more insurance companies are doing the actual cost value policy of the roof. So they're paying you what the roof costs at that certain time. So if you go and submit a roof claim and it's a $30,000 roof and it's 10 years old and they're going to depreciate it by that third of the life of it, that means they're only responsible to pay you $20,000. Where it gets complicated in that is what is depreciation and what can be depreciated, how much has a roof depreciated. So it creates complications, and that's kind of at a certain point that you might need an adjuster, an attorney to understand how to apply that and fight it. But what you guys need to know is pay attention when you're signing your contracts for your insurance policies that it's in replacement cost value is the one that you want to get. Actual cost value is the one that they do not pay depreciation on. And they're trying to slip that in more and more on people. American Integrity does that. So it makes it harder for you to get 100% of your insurance claim. And then the last thing is with the replacement cost one, which again, I know I'm throwing out a whole bunch of different terms here and just going back and forth between the two. And that's just it's just a complicated topic at a certain point. But they might sit there and say, like that example I said, where it's a $30,000 roof, it's 10 years old, so they're only paying 20,000 up front, and then you have to collect the 10,000 later. Some insurance companies will depreciate an insane amount. So you'd say it makes sense. It's 10 years old, has 30-year life. They take off, 30% of the roof. Some of them might say we're going to depreciate 80% of it, and we're only going to pay you 7,000 or 6,000 or whatever it is, and you have to go and get the 25 or 20 whatever it is later. So in those cases, nobody's going to go and foot the bill for a $30,000 roof and then hope that they're going to get the money back later and have to fight to get it. In those cases, you might need an attorney or an adjuster, because when I'm involved, I can negotiate to release all of the money up front and a settlement. And so it's at a point where they just say, hey, we're done, we're settling it. This is the amount of money, take it, and you guys leave us alone. So I've seen it, cases where it's a 30, 50, $40,000 roof. They pay 3,000 up front. And they say, now you have to go collect 25, 35, 45, or whatever it is after you go and put the roof on, and get me involved, and I'll be able to, force them to settle and pay. I mean, I've maybe out of 100, 5 of those I've dealt with where they still tried to withhold depreciation. Almost always they're going to pay it up front with me. So, and it's a little bit complicated, but if you guys have questions on that, you can talk to Jack or me after. I don't know, Jack, you have anything to throw in there? I think I kind of went a little too long on that.
Only thing I would say is, in Hurricane Irma or Michael, we had more time to file claims. They changed the rules to you have 1 year to file a claim and then only 1.5 total to supplement it. So if you've got issues, you got to get them in. Whereas back with Hurricane Ian, we had 3 years.
So thank you guys. We're coming down to the end of it right now, and I just want to touch a little bit. I'm a roofing contractor, but also a licensed contractor, and we don't have to mainly focus on roofing. If you guys have issues with sinkhole damage or with interior damage, fire, wind, water, whatever it is, Jack and Steven, they both can assist you guys on that, as well as myself. And the last few minutes, we're just going to open up the floor. But before that, is there anything else you guys recommend or want to talk about or touch on before we open up to any questions that might possibly happen?
I'll just say insurance is getting harder and harder. They're fighting more and more. Everyone asks me who's a good insurance company. I'd say almost every single one of them, if you make a legitimate claim, or it's you're unless your roof's ripped off, you're gonna probably need to get an adjuster, an attorney at this point. And I think that's just the way it's gonna be for the future. And a lot of attorneys are getting out of the industry because of the new law change. So it's getting tougher for everybody, but you can still get your claims paid. You just have to know how to navigate it. So that's all I'll say.
Thank you. Jack, do you have anything you want to throw out there that we didn't touch on?
Just again, check that 1% matching rule, and then the scheduled roofs and deductibles.
Perfect. Thank you, guys. Is there anyone in the chat that would like to ask a question or have any issues that are going on currently with your claim process, or if you're looking at doing a claim? Any questions from anyone? I know we went over a lot.
I'll ask a question and it could turn into a very long answer. I'm not looking for that necessarily, but I know in Port Orange, there's a few associations that are quads that all share the same roof. However, the association is not responsible for the roof. It's the responsibility of the individual homeowners, which I'm sure you can see the issue there is if one person is insured, one person is not insured the same. If there's a roof leak after a storm or in any situation where, it would require multiple owners to contribute to the replacement cost, how does something like that work? Is that obviously, in my opinion, that's something that would require someone like Jack or Steven to step in and help with that. But is that just like you're just out of luck kind of situation? Or is that something that the individual who's filing the claim, maybe their insurance steps in and takes care of all of it and then goes after the other insurance companies? How does something like that work?
So the first thing that I would do is get the policy. There's something called ordinance and law coverage, which is code. And if there was confirmed wind damage or hail damage on one of the roofs, I mean, hail would be on all the roofs because it wouldn't miss one. But if there was, say, wind on one of the roofs and not wind on the other three, and Andrew went to the county department and they said you have to do the whole roof since it's over 25%. I've had that one insurance company be able to pay for all four sometimes, and then I've had the other three sometimes file a claim against ordinance and law from the fact that it's being pressed on them from the county.
Okay,
Other than that, it's a pain in the butt.
yeah.
We've actually dealt with one of those a few years ago. I think the three of us worked on it, and it
Yeah.
turned out to be a pain, but we got it done.
Yeah, I've done a couple of them.
Sometimes you just have homeowners that are involved that don't want to be involved because they just don't care. You know, maybe the leaking isn't affecting their unit specifically, so, you know.
But then I've also seen it where they're just like, okay, I'll do my half of the roof and your half's gonna look weird, and that's just the way it goes. So, you know,
Yeah.
it's I've seen it play out all different ways. But I think you got a good idea about, the issues of it.
Perfect. I have no other questions that I can present to you guys. I think we touched on a lot, and I appreciate everyone taking the time today and meeting with us. If anyone does have any other questions, feel free to ask. But in the meantime, my contact information is on the page. If you want to get in touch with Jack and Steven, I believe their email and stuff will be sent out, and their contact information will be sent out, or you can contact us and we can get you guys in touch with them as well. Is there anything else we should go over, Diane?
I think that you guys did a great job. I appreciate all the information for the CAMs that are on. CAMs, thank you so much. Board members that are on, thank you. In the chat, we did put information to get a consultation for your association from AKC Roofing, and also their Google review to help us just promote this education program. Also, Jack and Stephen put their contact info in there. So before you pop off, please grab that. And I will be sending this out to all as a video so that you can share this with your fellow CAMs and board members. We appreciate you. We did it before an hour, which is always as promised. And we thank you for your time.
Thank
Thank you,
you.
guys.
Thanks.
All right. Thank you all. Have a great day.
Have a
Have a
good
great
one.
day.